Hey everybody, what's up? We are back with another stock analysis. Today we are looking at Intel. So Intel is kind of a giant in the legacy semiconductor industry. They've seen a lot of suffering recently. Their stock price has been plummeting for probably 2 years straight now. A lot of that, I believe, is because of a lot of competition, a lot of better competition. Nvidia is kind of destroying them in the space. AMD is kind of outpacing them as well, and there's a lot of smaller companies coming up, and Intel really just hasn't been keeping up with the huge growth that the industry as a whole has seen recently. So, overall, a lot of problems with the company. A ton of debt. We're going to get into all of it in a little bit, going through some recent news as well as all of their financials. So if you're interested, make sure to subscribe. I make these videos just about every day of the week. And yeah, let's get into Intel. So, getting into Intel, they primarily make computer products. They have a lot of different segments, not going through all of them, but they primarily make computer hardware as well as just semiconductor products in general. Looking at the company, they still have an enormous 93 billion market cap, which is huge when you really consider how far the stock price has fallen. Their target price is $23 currently. Long-term growth rate looks good at 7.7%. Right now they're just under $21, so there is a little bit of upside there. Looking at the chart, we can kind of see how much they have fallen recently. So they were primarily staying with the market up until 2020. After that, they kind of saw some suffering, had a little bit of a comeback, and basically went straight down for nearly looks like a full year, actually a little bit longer than a full year. Had another comeback, dropped back down, and now we are here at $20 a share after they were at basically $80 a share just about 5 years ago now. So overall, it's been a rough half decade for Intel. Looking at their growth summary, this kind of explains everything that you just saw in their stock chart. So overall, they are not looking great for their future. Again, this is kind of a legacy semiconductor company. Now, they do make good products. I think probably half of the people watching this video right now have at least one Intel product in their computers. So they make good products and they work well. The problem is that they're just massively being outpaced by other companies. Even companies like AMD, which also have a ton of debt and they're just being outpaced by Nvidia, they are still projected to grow way faster than Intel. So overall, I think this company needs some massive um, changes coming to the company within the next couple, not even years, couple quarters. One thing to note is that most of the companies that are they're like direct competitors have also seen fairly large EPS decreases over the past year, other than Qualcomm, which is growing very well. So it's not insane to see this happening, but a lot of these kind of older semiconductor companies like this are just kind of suffering in the world of Nvidia and companies like Nvidia. So, heading into their earnings now, let's kind of see where the problems are. So, I think I reviewed this company a couple months ago, and their issues were a ton of debt and decreasing profitability, which should be exactly what we're seeing here. It looks like also sales are coming down just based on this quarterly view that I'm seeing, but let's look at the full years. So, estimates for 2024 are looking like they're going to increase. However, they have not seen record sales in 4 years now, actually, probably almost 5 years. Um, they used to be at 70 billion, basically 70 billion or higher per year for 4 years straight, and since then have seen a massive fall off. Actually, their net income is projected to be negative for the fiscal year 2024, so not great there. Even their operating income is going to be negative. They barely squeaked through in 2023 with being profitable, but honestly, it looks like the company is just going to continue suffering unless there are some massive changes. So overall, does not look great. We can look at the last few quarters again and just kind of see what is happening here. So it does look like they have seen some growth over the past 2 quarters, although net income, never mind. No, they no, they haven't. Their net income is massively negative, and it looks like it's going to stay that way for 2024. So hopefully this is because of some restructuring activities. That's kind of the best case scenario here for the company in order for them to make it out of this without getting sold off or broken up into other companies, because that's kind of the direction I see this going in. You could see they have been diluting their shares since 2020. Their total number of shares has been increasing. And before that, they were actually decreasing fairly significantly. But now it looks like they're heading back up. So overall, not great for the income side of things. I'm sure the balance sheet is not going to be much better. Again, they had a ton of debt the last time I looked, and yes, they still do. This is in billions. They have $47 billion in debt, which I'm not sure why the number isn't popping up for me. It should say, there we go, all values in billions of USD. So $47 billion in debt is insane, considering that's half the market cap of the company right now. Now, they do have a ton of cash. They have 25 billion in cash, which is good, but overall, and actually this is in 2023. Let's go to the quarters and see the 2024 numbers. So overall, they look okay with their cash situation, and actually their debt has come down slightly. Um, Actually, not even. It's still at 46 billion and basically has been since March of 2023 or higher. So overall, it's just a rough situation here where their debt isn't unmanageable, just considering they do have a ton of equity in the company. So realistically, their debt to equity ratio isn't insane. It's actually not too bad, but just considering the numbers here is crazy. Total assets looks like is still increasing. And actually, I'm going to, well, they don't have 2024 on the years. Okay, we're going to stick to the quarters here. So total assets on average are increasing, which is a good thing. However, again, we saw with their income, it's really not doing much with the income situation. You could see their property, plant, equipment has increased every single quarter in the past 2 years now. So it does seem like they're expanding their capabilities, but at the same time, it just is destroying their profitability. And we'll see that when we go into their ratio analysis. But first, let's go through the cash flows. So, operating cash flow is fairly mixed here. You could see mostly positive, 4 billion positive in the last quarter, which is a significant increase from the two prior. Investing cash flows look okay. Again, mostly capital expenditures. They've also been on and off selling and purchasing investments, mostly selling investments, though, as you can see, 3 billion in assets sold in the last quarter. A little bit of cash flow from other funds as well, which is just them selling off more assets. For financing activities, you could see the change in capital stock has been consistently positive, which is them diluting their stock. The debt situation is mixed. They actually have paid off a lot of debt in the past quarter, which is good. Other funds, we saw them sell off a ton 2 quarters ago. And overall, their free cash flow has been very, very negative across the board. So, again, bleeding billions of dollars every quarter does not look fantastic for the company. Kind of visualizing the sales here, you could see the drop off of this company. A huge thing with it, it looks like, is the data center and AI, which most people would not expect. I feel like that is a enormous market, especially data centers, and the fact that they just completely missed that over the past 2 years is honestly embarrassing. At least in my opinion, that is embarrassing for the company. That shouldn't have happened. They should have been at the peak of that innovation, and instead they completely missed it and massively lost out on that revenue. Their client computing also saw a decrease of over 10 billion in revenue over the past 2 years. So overall, I feel like this is just a complete miss by the company. Um, and there's definitely a lot of work that needs to be done. So looking at their ratios here, hopefully they have 2024 included. which they do not, of course. So we're going to have to go into the quarters here. And overall, gross margin does not look great. Lowest we have seen in the past 2 years, which is pretty bad. Also, their SG&A to sales has been increasing over the past just about 4 quarters, it looks like. So again, bad signs. Operating margin just went negative. Net margin negative 30% is horrible. That's really bad. Cash flow margin, again, not great. ROA, ROE are both turning negative as well. And the last time we saw these go negative, it was negative for 3 quarters straight. So I'm honestly kind of expecting that again, considering the profitability between these two periods was very little. Return on assets was less than 1% for 2 quarters. So I wouldn't be surprised to see this pattern repeat itself again. Would not shock me. Looking at one last thing, their long-term debt to equity is increasing. They're at 46% now. The last time they were this high was in March 2023. So overall, I think it's going to continue increasing. Clearly, there's a massive amount of restructuring that has to happen here. And it just doesn't look good overall for the company. In my opinion, now considering their market cap is so large, it wouldn't shock me to see them not get bought out. Originally, I think in my last report, which was a couple months ago, I said I wouldn't be surprised to see them get bought out, but just based on what we're seeing here, I don't think it's possible with it being a $93 billion company. It would kind of shock me. It would shock me to see them get bought out. I don't think it'll happen. Looking into their latest earnings report that we saw, they do not have fiscal year 2024 out yet, unfortunately. But just looking through this, we can see some estimates and everything and how they did. So Intel products beat estimates in revenue. Client computing saw a decrease year over year. Data centers and network saw year over year increases, which is a little surprising. They also beat their estimates, which is pretty good, honestly, pretty good. Intel Foundry saw a decrease. All others saw a fairly large decrease year over year. Other than that, looks like they slightly beat estimates there, although again, $4 billion loss is nothing to be proud of. Gross margin 18% versus a year ago of 45% is terrible. And the estimate was supposed to be 38% for their gross margin, which that is terrible. FactSet estimate was a 0.6% loss for their operating margin, and they're at 17% negative. So just massive decreases and kind of problems coming up from the company in the past quarter that they have reported. Now, again, unfortunately, we don't have their Q4 report yet. It should be coming out soon, I'd imagine. But we do have the analyst takeaways. So overall, it looks like their target remains the same through this. Company falling short of 500 million AI goal. So not great there. 3 to 5% revenue growth. Company continues to cut costs, which is fine. Better quarter and guidance, but complexity is hindering both short and long-term financial clarity. So honestly, I feel like the company as a whole is just a mess, at least in my opinion. Not great. Increased outsourcing costs to Taiwan Semiconductor. So not great. Again, companies like that, like TSMC, are just destroying Intel, at least in my opinion. Now, they do have partnerships together, obviously outsourcing costs to TSMC, but in my opinion, they're destroying them. I really don't think Intel has a very bright future. They need to see some massive improvements, and the chart perfectly shows that. Even on the weekly view here, you can see they have not seen an all-time high since the 2000 bubble with tech companies. So overall, it's not looking great. Now, I don't think they will see their lows from the past decade at 13 or right around $12 a share. I don't know, but honestly, with the way their sales have decreased and the way they've just completely missed out on this AI and semiconductor boom, it really wouldn't shock me. And also just the steepness that this kind of channel is following, it it would shock me to see the company continue to go up. So overall, does not look great. Possibly seeing some further pain here just based on where the channel is going. It's leaning towards the $12 range, which again is where that support is. So actually, that definitely could be a possibility just looking at the way this channel is kind of holding up. It wouldn't shock me to say the least. Just based on the way the management has been going, based on the way the company has been going, massive decreases in profitability. There is a lot of work that needs to be done here. So yeah, that's all I got. Hope you enjoyed. Hope you learned something. Don't like Intel very much if you couldn't tell, but that's it. So thanks for watching. See everybody in the next video.